Let's talk about IRS audits in 2025. If you receive the letter 6323, here's some important things that you should do immediately. There's three. Number one, find out what the name of the revenue agent is the auditor. Find their name, their telephone number, and their fax number, and look at their address. Are they located in your city or outside of your city? If they're located outside, that could actually introduce some additional issues that are very important to understand at the beginning of the audit. Number two, who is the letter addressed to, the audit letter? Is it to you and your spouse, or is it to your business? If your business is being audited, IRS will likely open up your personal income tax return as well. The last thing to pay attention to is what year or years are being audited. IRS typically audits 3 years, but they may not do them at the very beginning. They might only open 1 year and then expand it to 2 additional years. The last thing we want to point out is on the letter, there's going to be a list of the issues at the bottom of page 1 and on to page 2. Those issues, they're not a finite list, and it's only the beginning. IRS will expand the audit to other issues. That's just a preliminary list that were identified by the IRS's computer on things that must be examined, but they will definitely examine more things. Typical things the IRS looks at: your bank statements, and they're going to determine whether you reported the correct amount of income. They're going to look at all the deposits and do what they call a bank deposit analysis to look at each deposit and determine whether it's taxable or non-taxable. And they're going to include all what they determine to be the taxable income and compare to what you reported on your income tax return. And if that amount is higher, they're going to assess you additional income taxes plus penalties and interest. Other things to pay attention to: if you made any payments to independent contractors like outside labor, and that's listed on your Schedule C on the top left, or on your corporate return, it's usually included as an other deduction in that amount and broken out at the end of the tax return. There's a statement for that. And if you paid independent contractors but did not issue them a 1099, IRS could disallow all of its expenses that required a 1099 to be reported. Or they could hit you with a backup withholding tax of 27%, basically eliminating the whole benefit of that deduction. A lot of things going out. The most important thing is you have to be credible and you have to be honest to the IRS. Doesn't mean you have to give them all the information. But having a tax attorney is definitely going to help. So I would absolutely recommend, if you have a business audit, hire a tax attorney, have them go through your financials, have them go through your tax return, go through the list of questions and make sure they've identified all the potential issues, and focus on the more important ones to resolve those, because then the rest of the audit would hopefully be resolved much quicker. And when you meet with the IRS is going to do an interview. They typically demand an interview of the taxpayer, which is, if it's a corporation, probably the corporate officer. If it's an individual, definitely husband and maybe a wife as well, or significant other who's identified on the tax return. They're going to interview you. They're going to ask a whole host of questions, some of it related to your background education. If they find significant errors, they're going to want to know: did you have a background in tax? Did you have a background in finance? Did you really know about the mistakes on the return? They might ask questions of your CPA. And another point to mention is any communication you had with your CPA prior, when the return was being prepared, or currently, is not protected communication. Only the communication with an attorney is protected communication. We're required to keep that confidential. IRS cannot get that information from us. Other points we want to mention is that in terms of credibility, when you're speaking with the IRS and you answer a question, but there's a document that shows the opposite, or it's not clear that what you provided the information is the whole truth, that could lead to a deterioration in IRS's mind that maybe they need to dig further and that the information you're providing is not accurate. So it's very important from the beginning, understand what the strategy is, understand what the narrative is, why were certain items reported or not reported, or if there's a mistake that's been identified, to provide an explanation. But really important, do not manufacture any documents for the audit. It's typically, that could be deemed to be fraud. Because if you have a payment that went out to someone but didn't get an invoice and you're asking them to create that invoice now, and you don't tell the IRS about it and it's being backdated, that could be deemed a fraudulent act. And IRS has a list of what they call the badges of fraud. And there's many other examples. That's just one clear one that we've dealt with in the hundreds of audits that we had with IRS. So it's really important to understand what are the problems in the audit before you communicate anything to the IRS. It's really important to analyze those and see where are the problems, where do we think the case is going to go. We typically do that for our clients before we meet with the IRS, and we'll identify an issue list. It just makes things go quicker, and it builds a lot of credibility with the revenue agent, and hopefully resolving cases or resolving issues much quicker. Because if they don't trust the information, they're going to dig down, and it's going to take longer. And they could disagree with many other things that might be legitimate or gray, and they would determine them to be not correct. I'm John Milikowsky, founder of Milikowsky Tax Law. I hope this information was useful.